What's a sensible amount of risk that you should take for each trade that you place as a Forex trader? Let's talk about that important subject and more right now. Hey there traders, Andrew Mitchem here, the owner of the Forex Trading Coach with video and podcast number 535. Today I want to talk about risk, preserving capital, keeping your drawdowns low. And it all comes back to how much should you place on a trade in order to be a successful trader. You see, for me in trading, there's two things you have to control. One's up here, your head, one's in here, your heart. So you have to keep those emotions under control. And you can do that quite easily by controlling your risk, because the fear and the greed always come into trading, self-doubt, but then greed when it comes to making money. Risk management is absolutely crucial. And unfortunately, far too many people don't know that, and they don't know how to control that, and they don't know how to implement that practically on a day-by-day basis into their trading. You see, I think there's a lot of people out there that just don't know how much risk they're placing on a trade. They just place a trade and they go, oh, I've got a 20 pip stop loss and I'm going to put one lot on it, or 0.1 lots, because that's just what they think they should do. That is not how you trade. For me, the best way of trading is to have a known and low risk on every single trade. So you go into a trade and it doesn't matter what the currency pair is or even what the market is. I've taken a trade on corn this week, and it doesn't matter whether it's corn on a weekly chart or the Euro US on a 4-hour chart. It doesn't matter. Every single trade has the same risk. It's known and it's low. So you have to adjust your position size according to where your stop loss needs to be in order to calculate that. And it's very easy. And I have a free lot size calculator that does all that for you. But by doing that, it means that every single trade that I take has the same risk. And by doing that, I can control my emotions and I can control my drawdowns. Now you have a search out there online, and you'll find that most people will tell you to risk somewhere between about a 3 to 5% risk per trade. I think that's utterly crazy. You have, let's say, 4 trades go wrong and you're instantly 20% down on your account. Now you need a lot of good trades to go right to make that 20% up just to get to break even. Now that in itself is not a good way to trade. For me personally, I risk half of 1% per trade. So my 4 trades go wrong, I'm now 2% down. When I'm trading on a prop firm, I risk half of that again. So I risk only 0.25% risk per trade. In other words, if 4 trades go wrong, I'm now 1% down. That is within the rules, the criteria of a prop firm. It means I can have multiple trades all go wrong in a row, which is incredibly unlikely to happen. But let's say it did, before I get anywhere near the maximum drawdown that most prop firms allow, which is somewhere between sort of maybe 5 or 6%. That will never happen if you're trading such low risk per trade. So it's really important that you preserve capital, you treat your trading as a real business, treat it seriously, and you can do really well. Now, just to give you an example, this week on my prop firm, so I'm trading here 2 hours through the 12-hour charts on that prop firm. This week I'm up 2% so far, and we've still got a whole day to go. And I'm only risking 0.25%, a quarter of 1% risk per trade. Now, if I end up the week with somewhere like 2%, maybe slightly more, maybe slightly less, depending on how today goes. If I do that, say, 4 weeks in a row, I've passed that prop firm. 4 into 5 weeks because of compounding on my gains, I've now passed that 10% challenge. And that's how you can get through and trade prop firms if that's the route you want to go. Now, of course, on my own personal account, if I'm doing that at 0.5% risk, that suddenly becomes a 4% gain so far for this week. So it shows the gains that can be made while still keeping your risk extremely low and preserving your capital. So I hope that helps with that situation. If you'd like to know more and you haven't been on my free 1-hour masterclass, I'll put a link here below this video and podcast so you can do that. It's on demand, so just find a time that suits you, allow about an hour and jump onto that masterclass, and it will give you a huge amount of information and trading tips and information of how you can become successful. And if you're out there looking for a really good broker, I can highly recommend Blueberry Markets. They're based over in Australia. They offer the MT4 and the MT5 platform, a huge number of markets and various time frame charts, obviously built into the MT5 platform as well. And if you're out there looking for a good broker, I can highly recommend them. And I'll put a link to Blueberry Markets on this video and podcast as well. So any questions you have, any topics you'd like me to discuss on future sessions, please email me, andrew@theforextradingcoach.com. If you're on YouTube, please like and subscribe, and feel free to share this video. And I'll see you this time next week. Bye for now.